This is the briefing for Friday, August 11th. This has been a tough week in the stock indices. Basically, we've really not done anything. We've really not gone anywhere. And it's going to be very interesting when I get to the Russell. I'll show you how that has really not gone anywhere from potentially all the way back to 2016. This is the spiders on a daily basis, and we have been in a rotational pattern. You can see we broke out of this pattern here, traded up to about the 459, 460 area, and then back down to test the 445 area. Now you can see that basically all of this week we've been rotating just above that 445 or at or just below in today's trading. A little bit surprising to see the gap down this morning and then the rotation back up to close above 445. I really thought that today would potentially be a day that they would break the 445 area and see an extension down, potentially moving down to the 430 area, which is the next level of support for the spiders. Now, interestingly enough, you can see volume really has not been very good in the spiders, and today it even dropped off some more. But the interesting thing is what's happening with breadth. This is Monday's trading right here, and you can see breadth was right at 300 shares positive. Now this is S&P breadth for the S&P 500, and then it got to just a little over 200 shares negative, and then today it was basically neutral with only 53 shares positive. What is happening though is there's a deterioration that's happening internally outside of market breadth within the indices, and how this is resolved is going to be very interesting. You can see that the decline, this is 52-week highs minus 52-week lows on the NYSE, and you can see how it is declining pretty dramatically along with price as it tests this 445 area. Looking at the Qs, you can see we've done the same thing, except the Qs, the NASDAQ has traded through this 372, 373 area and extended down below the last 2 days low, which was pretty interesting to see today. But once again, volume is falling off or fell off in today's trading. Breadth is basically flat in the NASDAQ, but the next level of support in the Qs comes in at 356, and then of course resistance is 372 area. So it's about halfway down this rotation. So you can see this rotational pattern here. We broke out another rotation, we broke down, and it's going to be interesting to see if we are developing into a greater degree rotational pattern such as this. So it'll be interesting next week to see if the market can break down even more and have the internals continue to confirm what's happening. But right now, there just is not impulsive selling in this market, even though we are below, at or below, very important support levels. Now this is the Russell, and you can see the Russell's high was right at the 200 level, 199 to 200. And then we traded through this 193, 194 area and tested 190 in today's trading as we did in yesterday, but closed above it once again. Trading and closing below 190 in the IWM would then suggest the possibility that we're going to be trading through and down to 180. Now, with that said, the market spends most of its time in rotation depending on the time frame you're looking at. It is fractal in nature. So it is possible that since we've come down and tested support that we're going to see another rotation back up again, potentially up to the 200 level. But until that happens, or until we see a strengthening within the internals of the market, I think that is probably, at least at this point in time, the lower probability. But it still is a possibility, so we have to keep that in mind, especially since we can't seem to break impulsively through these lower support levels in all three of the indices. Now, I want to make a pretty good point here. This is a daily chart of the IWM, and you can see the rotational pattern that it's been in, going up to this 200 level, and then selling off, going down to about the 170 level, and then increasing. But you can see, I'm going to go all the way back here, and you can see that 200 has the Russell going all the way back to August 15th of 2022, a year that it has been unable to trade much above the 200 level. So for 1 year, the Russell has been in a greater degree time and price rotation. So what happens here is going to be very important because we tested this 200 level going on July 31st and then sold off immediately and coming down to test the 190 level. So it's going to be very interesting to see potentially if we see another rotation back to the upside. Now, in terms of overbought and oversold, we're neutral, and we've been neutral for most of this week in both the NYSE and the NASDAQ. So this really gives the market or the indices the opportunity to trade either up or down without reaching a point at the open of being extremely overbought or extremely oversold. The indicator gives us a pretty good indication of a potential counter trend rotation to whatever the trend may be once we reach an extreme overbought condition or an extreme oversold condition. Then we can expect the potential for some type of rotation in the opposite direction. Now, in terms of other factors that are deteriorating internally, this is the percentage of stocks above the 50-day moving average, and this is for the S&P 500, and then this is the percentage of stocks above the 200-day moving average for the S&P also. Now, it's interesting. Now, this is the spiders here. This is the spiders here as well. So you can see the divergence. This was the high that was made on July 27th. And you can see that the divergence that we were already seeing, the number of shares above their 50-day moving average was starting to decline, which led then to this move. And then the same thing occurred on the 200-day moving average. You can see right here that it traded back through trend. And then, of course, we got this move back to the downside. Now, the important thing is that this move in the spiders, or in the S&P, is while it's not become impulsive, at least at this point in time, the collapse of the number of shares in the S&P 500 that are trading above their 50 and 200-day moving average continues to fall. So at some point in time, unless this changes, we're going to see some type of impulsive move to the downside. At least that's what the internals are telling us. Now, I have to qualify that because, and this is, I've said this periodically, that this is not statistical, but it's just something I use from a psychological perspective. When I look at internal divergences like we see here, when they're as glaring as they are, I usually put a 70% probability on it that we're going to see price correct to the internals. However, there is a 30% chance, and once again, that's a psychological aspect for me, that the internals will correct to support price. But that typically will happen a higher percentage of time around a news event. So unless there's a news event, the probability of price correcting or continue to correct to the deterioration in the internals is probably the higher possibility, at least at this point in time. This is the NASDAQ percentage of shares above their 50-day moving average and their 200-day moving average, and you can say the same thing is occurring. And you can see even today we had more of a decline as a result of that in both the 50 and 200-day moving averages. And this is the Russell. So you can see the Russell really was diverging for quite some time. We reached a high right here, then we had this move higher, and the percentage of stocks above the 50-day moving average could not increase. And then as we got into the high on July 31st, you can see the decline had already started. We had a little bit of a upward move on the 31st, and then it has declined all the way down to test the low of this really rotational pattern that we're seeing in the 50-day moving average. Same thing is occurring in the 200-day moving average in the Russell. You can see how it is declining and declined even more in today's trading, even though the Russell was able to hold above the 190 level, which is a very important key reference area. Now, looking at volume, this is total volume on the NYSE. You can see it was below trend on today's trading, so very low volume day. Volume on the Nasdaq fell off pretty dramatically as well. So really going into the end of this week, not a lot of volume happening. So volume was collapsing even though we were in a downtrend. So there's a little bit of a divergence in volume with price because basically we're not seeing an impulsive move. So if we see an impulsive move, that would be breaking the support levels that I've just covered in this briefing and seeing volume increase as that starts. That would give us an indication that it is becoming an impulsive move. But as of right now, it's not impulsive, and we can potentially expect the possibility of a continuation of rotation. Now you got rotation here, rotation here, rotation here. So it's going to be interesting to see whether we see a breakdown, an impulsive breakdown and follow through, or whether we're going to see another rotation back to the upside. The jury is still out in that regard. But as of right now, the internals are deteriorating. Volume is not confirming an impulsive move, at least yet. But that certainly could change the first part of next week. Have a great weekend. I'll pick this back up for subscribers on Monday.